Okay, and it's the fourth episode of 4 regarding the state of economies around the globe and analyzing where the gauges are heading us to. So let's have a look at another aspects. On trading economics right now we are analyzing a Swiss economy, and right from the most important gauges from previous month we have a consumer confidence that really has slumped. So right now we can find that consumer confidence has turned back to those levels been seen recently and during first half of 2021 when there was still pandemic times in the air. So right now this sentiment has been revised into minus 18.5 points as the consumers right now are assessing the problems that stems from hiking consumer prices due to the war in Ukraine. So more and more consumers are getting into this defensive mode when they are rather trying to protect the capital than thinking about the expansion. So we are heading back to minus 20%. Those levels been seen before in 2015 and also 2011 when those European Union times of a possible breakdown was also been discussed. So right now consumer confidence is showing us the possible problems to the economy. So let's have a look at data regarding the chart, and we have Swiss franc futures, and Swiss franc futures are showing us that right now after this very long period of time of a grow, we can find that we are consolidating throughout over 10 years, and right now due to this gold growth we've seen that also Swiss franc futures has risen right now with this slump of a gold and also a risk on appetite. We could find that Swiss franc futures has also going through downturn. So Swiss franc right now is rebounding very firmly from those levels of one level, and we can observe that we should rather stay around this area of 1.03 level. So we are still consolidating. Another possible support will be right around the area of 1.01 and 1.02 levels. However, we have probably reached a resistance around here 1.034 level. Right now let's have a look at Australian data. So we are starting off with inflation rate. Inflation rate right now is getting to a 5 percentage point, where we can find that recently 5.1% percentage level been seen in Q3 of 2000. So this inflation rate hasn't been seen throughout 22 years. Right now we can observe that transport prices rose the most since the 1990 Iraqi invasion of Kuwait, while additional upward pressures came from cost of food and non-alcoholic beverages. So as of next RBA interest rate decision, right now we can find that we started a period of interest rate hikes we can observe that right here we can find that the Reserve Bank of Australia raised the cash rate by 25 points to 0.35%. So right now we can observe that Australian currency that is strictly correlated with different commodities such as gold right now is rather showing the strength, as Australian Reserve Bank don't want to hike very much. So Australia economy is quite resistant to the problems with whether it's disrupted supply chains or whether it's war on Ukraine issue. So let's have a look at the balance of trade, and the balance of trade is showing us that there are more and more exports from Australia, especially concluded the boom around the globe on commodities, and right now we can find that Australia is quite taking a gain of this demand. Of next we have business confidence, and business confidence right now is still in a quite satisfactory level. We are nearly a 20ish area, that still means there is still appetite for expansion. So there are no very specific signs of a incoming recession right in Australia as of yet. Consumer confidence, however, consumer confidence right now has slumped, and we can find that it's due to an increasing inflation. We can also find that surging prices and the prospect of faster interest rate hike is really scaring lots of customers, and right now pushing lots of citizens into a quite of an defensive phase. And of the last one, unemployment rate right now is quite of a very low, right as it was back in right before this global crisis of 2008 has broke out. So it means we are in a quite satisfactory position where we shouldn't observe any major economic slowdown due to the issue of unemployment. Alright, and let's have a look at Australian dollar futures, and right now we can find that we are performing to the downside since this bull market has ended on second half of 2021. So we can find that we are gradually going downwards, and with this one trial of a breakout that haven't been succeed, we are right now getting back to those 0.7 low 70ish area. So the next possible support is right where we have just stopped on 9th of May of this year. There was around 0.68 points, and the possible resistance might be seen right around 0.72. Right now I do expect for Australian dollar futures to consolidate around this area where we are right now. In terms of New Zealand balance of trade, right now we can find that New Zealand is importing more rather than exporting after this quite a very robust time of more exports. Why has it happened? We can find that imports climbed to 15%, and the balance of trade showing us that when taking a 1 year period, the trade deficit widened to 584 million in April, and right now we can find that imports has outranked the exports for since May of 2021. So we can find it has been due to purchases of pharmaceuticals products, also mechanical machinery and equipment, food residues, wastes and fodder. So right now we are heading back to those levels of around 500s, and we should see a possible relief in coming months if this if the past is an indication. We may see a possible relief around those areas. As of next, we have very important also unemployment rate, and right after COVID gone, we can find that we are finally back to those before 2000s area. So there are no signs of recession as well in New Zealand regarding those economic indexes. RBNZ interest rate decision is showing us that we are right now hiking as we can, as New Zealand's currency is weaker than Australian. We can find that Reserve Bank of New Zealand not wasting its time and trying to hike interest rates in a quite a substantive pace. So we are right now getting back to where we were before 2020, and whether it will get even higher we will see during next Reserve Bank meetings. So such gauges as solid labor market and also sound household balance sheets, a continued fiscal support is showing that Reserve Bank might be really prompt to move interest rate hikes higher. Right, so let's have a look at the New Zealand dollar futures. And right now we can find that we've really seen a similar situations that have been seen on Australian dollar. We have peaked in the second half of 2021, second half of February of 2021, and right now we have gradually been slumping. So we found a support right there on 0.62 level with a rebound to around 0.65. We should observe the New Zealand dollar futures to stabilize somewhere around this area. The possible going downwards is not really something to be considered. I do rather expect New Zealand dollar futures to stop right around this horizontal levels and probably stay there for a bit longer. Alright, so we are officially through those episodes, the series that have an introductory aim to understand what was the background of economy throughout recent months, to help us easier understand where we might be heading in the future and what is the current situation of different economies. So during next days I'll be broadcasting different types of videos that will be updates of what is going on in the market right now and what are the future scenarios of different economic aspects. So thank you very much for watching. Don't forget to subscribe to the channel. See you tomorrow.